U.S. tariffs on Canada and Mexico have been delayed for 30 days to allow for a period of negotiations between the U.S. and its neighbors on drug smuggling and illegal immigration. With more press perspective today. Hello and welcome to Press Perspective for this Tuesday, February 4th here in Seoul. I'm Min Sunhee. Today we address the first set of tariffs announced by the Trump administration and their implications for other U.S. trade partners, including South Korea. For more, I have Lee Ji-hoon, a correspondent for Reuters, here in the studio. Ji-hoon, welcome back.
Good evening.
I also have Professor Yang Jun-sok at the Catholic University of Korea joining this session virtually. Professor Yang, as always, it's great to have you with us.
Happy to be here.
Right, we shall start here in the studio. Ji-hoon, let's begin with details about the delay to implement the 25% U.S. tariffs on Canada and Mexico, which we had expected to take effect today. Could you walk us through the events that led to this dramatic pause, if you will?
Yeah, it started last Saturday when U.S. President Donald Trump signed executive orders to impose 25% tariffs on imports from Mexico and Canada and 10% tariffs on imports from China starting today. He said the measures are aimed at preventing illegal immigration and drug smuggling into the U.S., and that the measures would stay in place until what he called a national emergency ends. That prompted Canada and Mexico to respond immediately with countermeasures such as tariffs. While Trump went on to say he was also considering tariffs on other countries or regions such as Europe, though he did not give a specific timeline. And that raised worries about a global trade war in global financial markets yesterday, including here in South Korea, which is heavily dependent on exports, of course. On Monday, the Kospi fell 2.5%, which was the biggest daily drop since early December. And that came despite the fact that financial markets had already been pricing in the anticipated tariffs since late last year when Trump won the presidential election. Among South Korean stocks, losses were especially heavy in exporting companies such as auto, battery, and chip makers. And Kia, for example, fell 6% on worries that its factory in Mexico might be affected by the tariffs. LG Electronics, which also has a factory in Mexico, dropped 7% to the lowest in more than 2 years. But then a lot changed overnight after Trump had phone calls with leaders of Mexico and Canada. During the phone calls, Mexico and Canada promised efforts to crack down on illegal immigration and drug smuggling. And in response, Trump decided to postpone the tariffs for 30 days. And during the time, he said he would try to negotiate a trade deal with the two countries. Today, the Kospi rebounded as analysts said the series of events raised hopes that Trump's tariffs could be just bargaining chips for trade negotiations and less likely to be implemented in reality.
Right. So while the 25% U.S. tariff on Canada and Mexico have been delayed for 30 days, Ji-hoon, I understand the additional 10% tax on Chinese imports have actually gone into effect. What's the latest on that front?
Okay. Yeah, the 10% tariff on China started to take effect as of 2 p.m. today, Seoul time, which was midnight in Washington, D.C. That is lower than the 60% Trump previously talked about, but he said he might raise it higher, and experts say there is a possibility of gradual increases over the year. And China also responded immediately, introducing tariffs against tariffs on imports from the United States. Its finance ministry said this afternoon that new tariffs of 15% will be imposed on energy imports from the U.S. and additional 10% on imports of crude oil and automobiles from the United States from next week.
From next week, then.
Meanwhile, in South Korea, acting President Choi Sang-mok said today that domestic companies manufacturing cars, batteries, and home appliances, they are already being affected by the tariffs. He said the government will prepare an emergency trade strategy and utilize all available resources to mitigate the impact of U.S. tariffs on domestic companies. He also said the government will prepare support for companies restructuring supply chains due to tariffs, which is a move similar to Taiwan's promise that it will help companies planning to relocate their operations after tariffs are implemented.
Right, so that would be the response measures from the acting president here in South Korea, Choi Sang-mok. Professor Yang, what look to be the broader implications of such trade confrontations, if you will, between the U.S. and its trade partners on the global economy?
Okay, well, let's look at what would have happened if Trump did put the tariffs on Canada, Mexico. Yale Budget Lab has calculated that if 25% tariffs were put on Canada and Mexico and 10% tariffs on China, over the period of 2026 to 2035, U.S. GDP would fall by 0.4% to 0.6 percentage points, and PCE inflation would rise by 0.7 to 0.8 percentage points, depending on whether there's retaliation or not. Consulting firm EY has said that if the tariffs had gone into effect, the Yale Budget Lab figures were over the next 10 years, but just this year, inflation would rise by 0.4 percentage points. And then Canada and Mexico would likely go into recession because so much of their economy depends on U.S. Exports. Canada, about 25% of their GDP goes to American exports. Mexico, about 32% of their GDP goes to U.S. exports. So it would have been a major shock to those economies, and they would have gone into recession in all likelihood. But it would have been, I think, the Yale Lab numbers sort of underestimate what possible impact it could have had on the United States, because some products from Canada and Mexico cannot be easily replaced by other sources, especially American sources. And then supply chains of US, Canada, and Mexico are integrated, especially in manufactured goods like automobiles. So you have parts going in and out of the borders multiple times before they end up in a car. That would have added substantial costs to American-produced automobiles for American consumers. So I think some of these simulations underestimate the potential damage for the United States and the global economy. But the United States is the strongest advanced economy right now, and they're likely to remain the engine of growth for the global economy for 2025. So if they have tariffs and close off the economy, and because of the tariffs, they go into a slower growth mode, then obviously the entire global growth will fall. No one knows exactly how much, but it will have consequences for global growth, not only for the United States, Canada, and Mexico, but for other countries as well.
Right. Chun, quite a number of pundits have echoed the concerns shared by Professor Yang with regard to inflation, a potential surge in inflation in the U.S. amid, of course, the presence of Trump tariffs. Could you tell us a bit more about that?
This week already, there have been numerous investment banks publishing reports about the impact of U.S. tariffs on the U.S. economy. And many of them say there is a possibility of the tariffs reigniting inflation pressure because companies are likely to pass on higher costs to consumers. For example, Societe Generale, a French investment bank, expects Trump's tariffs to raise consumer prices by 0.5% to 1%. And ANZ, the Australia New Zealand banking group, also expect tariffs to raise inflation by 0.2 or 0.3%. Oxford Economics in Britain, meanwhile, said U.S. core inflation could rise to more than 3% by the third quarter, along with downward pressure on consumer spending and employment. The U.S. National Foreign Trade Council said, quote-unquote, tariffs will raise the cost of everything from avocados to automobiles, urging policymakers to come up with a swift, quick solution. And because of that, many economists are also expecting the Federal Reserve's interest rate cuts will be delayed this year. After holding interest rates steady last week, following 3 consecutive rate cuts late last year. Fed Chair Jerome Powell last week said the central bank is not in rush to lower interest rates because inflation is still elevated. He said, quote unquote, we do not need to be in a hurry. So some investment banks like Nomura in Japan is expecting no more rate cuts by the Federal Reserve this year, or at least until June next year, because of inflation pressure that could be heightened due to the tariffs.
Right, I see. And speaking about tariffs again, for export-oriented countries like South Korea, of course, they are a great concern. That being said, for the first time in 16 months, June, Korea noted a fall in its exports last month, in January, that is. How are market observers explaining this fall?
So South Korea exports fell 10.3% in January, which was the first fall in 16 months, as you said, and the biggest drop in 1.5 years. Economists said the fall came after some front-loading of shipments and orders by foreign companies ahead of U.S. tariffs. In China especially, exports jumped 11% in December because firms wanted to avoid U.S. tariffs by shipping stocks in advance to the United States. Moreover, economists said demand is also weakening in the semiconductor sector, which led South Korea's export growth last year. Samsung Electronics, for example, said last week that its sales of AI chips will slow this quarter, and because of U.S. restrictions against China, and demand for semiconductors, computers, and smartphones are likely to be weak this quarter. In some sense, experts say the headline figure of 10.3% was distorted by the calendar effects of Lunar New Year holidays of this year being earlier and longer than last year, which means exports are likely to rebound in February. And there were other brighter signs as well. For example, the 10.3% drop was much milder than 15% seen in our survey. And PMI data also showed the manufacturing sector expanding in January thanks to continued growth in overseas demand. Still, many experts are saying there is high uncertainty over exports due to tariffs. According to Citi, which is a U.S. investment bank, South Korea exports are expected to fall about 1.1% in the first half of this year, and that is compared with 9% growth in the first quarter of last year and 7% growth in the second half.
Right, I see. And speaking about uncertainty, Professor Yang, the uncertain fates of the former Biden administration's Inflation Reduction Act, as well as the Chips and Science Act under the new Trump administration, are causing quite a bit of concern within corporate Korea. What look to be the broader repercussions, Professor Yang, of a retreat from these acts by President Trump on Korean companies?
Okay, well, Trump has said that he will revoke Green New Deal, but Green New Deal was the name of the law which never passed Congress, so he presumably means the environmental aspect of the Inflation Reduction Act, the IRA, which deals with EVs, electric vehicles, and electric vehicle batteries. Now, the current U.S. Secretary of Commerce has said that he will stop all subsidy payments until he has a chance to examine them, and he has threatened, implied that he may cancel these subsidies. And while Trump has not targeted Korea directly, he is threatening tariffs on virtually everybody. And he has, during his campaign, said that he wanted to replace subsidies for semiconductor factories with high tariffs so that the semiconductor makers will have to invest in the United States. So let's look at the two main industries separately. First, the semiconductor industry. Now, Korean companies investing in the United States semiconductor facilities, if they're getting any subsidies from the state governments, those are probably safe because state governments want those jobs, want those factories in their state. For federal subsidies, as I said, the Secretary of Commerce said that he has halted them for now and he will examine them. But if the Korean companies signed a contract, and they probably did at the end of the Biden administration, then Korea has the ways to get the money. But we have the semiconductor companies have to be brave enough to, if they do not get the money, sue the United States government and threaten that without the subsidies, they will withdraw from some of the investments because, well, the reason that United States is giving these subsidies is that United States cost is more expensive than Taiwan or Korea. So the companies will not be able to keep in the black if they have to operate in the United States without a subsidy. And if the United States do want to replace tariffs, then the tariff rate has to be higher than 20 to 30% because that's the cost differential. And that would mean major hardships for U.S. High-tech companies, including AI research. So I doubt if that's going to happen, or if they do, the United States will be shooting itself in the foot. Now, for electric vehicles and electric vehicle companies, they're in a more precarious position, but so are the American automakers who have invested in the EVs as well. Reportedly, the only company in the United States that can survive without subsidies is Tesla. So if they do decide to withdraw subsidies for EV and EV battery makers, that will affect the big three automakers in the United States as well as Japanese companies that invest in the United States like Toyota.
Right, I see. Meanwhile, moving forward, Ji-hoon, earlier you talked about how the Korean stock market lost substantial ground in light of news about Trump tariffs. Of course, the market also responded sharply to news of remarkable advances in China's AI technology. What's the latest with regard to the local bourse?
Yeah, last Friday was another bad day for the Kospi. Last week, when South Korea was on holiday, there was a global tech rout right after China's startup DeepSeek's launch of its new AI models, which is said are much smarter and cheaper than U.S. models. That raised skepticism over America's leading industry shares and concerns over U.S. chip makers supplying high-end chips for AI technology. For example, AI chipmaker NVIDIA fell 16% last week, which was the biggest in more than 2 years, as the Philadelphia Semiconductor Index fell 6%. Following that, last Friday, South Korea's stock market also fell sharply, with shares of SK Hynix posting its worst day since last August by falling 10%. In just one day, foreigners sold local stocks worth 1.2 trillion won, which was the biggest since late September. Having said that, there was some optimism as well because some domestic IT companies could benefit from cheap AI costs. On Friday, for example, in contrast to chip makers, software companies rallied, with Kakao rising 7%, while Naver rose 6%, which was the biggest jump in nearly a year. And this week, AI continues to be a major issue in the domestic stock market, with Kakao rallying again this week after it signed a partnership agreement with OpenAI to jointly develop AI products.
Right, indeed. And Professor Yang, on the broader corporate front, what are the implications of Chinese AI advances for Korean chip makers?
Okay, well, in the short term, I think because the American AI developers want to maintain their momentum and perhaps get on the leap over the Chinese DeepSeek, there might be an increase in investment, which means a higher demand for higher priced chips, the HBM chips. In the longer term, though, because DeepSeek is open source, some aspect of DeepSeek, especially how to do things more efficiently with less expensive equipment, I'm sure that will trickle down to American produced AI as well. So in the longer term, there might be a demand for the higher priced HBM chips may decline, but the demand for memory chips overall will probably be steady because they will be replacing the higher valued HBM chips with perhaps lesser priced chips like the DeepSeek did. On the other hand, because United States may seek to hinder DeepSeek development even more, some of these mid-level chips that Korea is now able to sell to China, well, the United States may put an export control over it to further hinder Chinese AI development.
Right, I see. All right, I'm afraid that's all the time we have. Professor Yang, as always, thank you very much for your time and your thoughts.
Thank you.
And Ji-hoon here in the studio, thank you very much for your insights.
Thank you very much.
Right, well, that ends Tuesday's edition of Press Perspective. As always, thank you for watching and be sure to join us again same time tomorrow.